He who is faithful in what is least is faithful also in much. And who is unjust in what is least is also unjust in much. Luke chapter 16 and verse 10. Whether we like it or not, business is a numbers game. The scripture I just read talks about being faithful in little and therefore qualifying you to be faithful in much. How do you know if you have little or much if you don't actually sit down to count the cost, like one of our favorite scriptures in Business, Faith and Finance? Today, I want to talk about the different business terms that each business owner and entrepreneur should know. I know that you think business is all about passion and the fact that you just love to do events and make people happy when they walk into their wedding hall or their birthday hall. I know you like photography and you just like to, document the entire process very well. I know you love to serve your customers in whatever way, maybe food, services, etc. And so you've opened a business in line with your passion and in line with helping people. But the truth is, when it comes down to it, when you strip everything back, every business is literally about the numbers. And so for all the passion that you have, you need to also, as an entrepreneur, to be successful in your business, you need to also understand the number side of things and therefore the terminology that goes with the numbers. I'm an accountant, as you already know, so we are going to go there. These key finance terms that every entrepreneur and business owner needs to understand in order to be able to confirm whether they have little or whether they have much, and be able to manage and effectively steward the little or the much, qualifying them for the next season. So let's start. The first term is turnover, revenue. Turnover/revenue, literally, you will hear people interchange between the two. They mean the exact same thing. It is basically the amount of income that comes into your business. Some people will say sales, for example. If you have 10 pens that you have bought and you are going to sell those 10 pens for £2 each, £2 times 10 pens is £20. That is your turnover, that is your revenue. It's worth mentioning actually for all the terms, starting with turnover and revenue, that you normally measure these according to a time period. So you can say your turnover or your revenue in a month, your turnover or your revenue in a year. Of course, when people do accounts, they tend to look at a 12-month period. But as a business owner who is actively managing and actively monitoring their numbers, you want to be doing this as often as possible. You can even find out your turnover for the day, your revenue for the day, especially if you are the kind of business whereby you're selling, fast consumable goods. You're selling products that have low value, but you're selling high volume. You want to be able to know your turnover, your revenue, your sales, per day, per week, per month, per year, so that you can begin to count the cost. The turnover and the revenue is at the top of every balance sheet. And if someone might say, what is a balance sheet? We will get there, but it's at the top of your finances, at the top of your table, if you are going to start counting your cost. What is the next terminology that you need to know as an entrepreneur? There is profit. I know you already know what profit is about. Profit is what is left after your expenses have been taken away, right? What is left for you to take home. Now, did you know though that there are two different types of profit? Yes, there is gross profit and there is net profit. Gross profit and net profit. So let's start with gross profit. Gross profit is a profit that is made after taking away the cost of goods sold. Cost of goods is another terminology. So cost of goods has to do with the literal raw cost of producing your product. If you have a pen, I'll use a very simple example. You are looking at your raw materials, you're looking at the direct labor costs, you're looking at the manufacturing costs, you're looking at the inventory costs, the costs associated with that particular item. Normally, you should be able to say, I bought the pen for 50p, I sold it for £1, the cost of goods is 50p, maybe plus 25p delivery or whatever. therefore there's 25p profit, in a very simple example. So the cost of goods is literally the direct cost, direct labor, direct materials that is used to produce an item. Now, for our service-based businesses, this is going to be your time. If it's taking you 5 hours to deliver a service, you need to be including that as your cost of goods. If you're having to take transportation, you're having to take a taxi, or you're having to buy petrol to be able to go to an event, for example, to deliver a service, or to go to a location to deliver your service, that is a direct cost of delivering or producing that service. So that is what you would consider cost of goods. So when you take your cost of goods for the item, for the service, away from the revenue, the turnover that you've made, you are left with gross profit. So gross profit is simply revenue minus your cost of goods sold, which can include, or should include rather, your direct labor costs or direct material costs, and you're left with your gross profit. Now, many people celebrate. They say, yep, I have sold it for more than I bought it for, so therefore I've made profit. Now, this is where you need to be careful and pay attention, because of where we're going in terms of net profit. Net profit is when you take away all the other costs of your business. I gave the example of you taking a journey to go and deliver maybe a workshop, or go and do some photography services, or whatever it may be. Now, you would have put £20 petrol, for example, in your car to get there. What about the cost of the insurance? You can easily identify and say, okay, it cost me £20 to go from where I live to the person's venue to be able to deliver the service. But how do you apportion the annual cost or the monthly cost of your car insurance for that service? It's quite hard to do, right? And every business is like that. If you're a service-based business, it's easy to say, it took me 2 hours to deliver this presentation. But what about the electricity? What about the Wi-Fi? How do you appropriate, that it cost me £2.65 worth of Wi-Fi to deliver this workshop? It's hard to do. And so this is where the term overheads comes in. Overheads normally includes things like rent, your marketing, your administrative costs, your utility bills. These are the operational costs of your business. And the truth is, about the operational costs of your business, they tend to be things that you will incur regardless. So even if you don't have a booking, you have to pay for your car insurance, right? Even if you don't have a booking, you're going to pay for your Wi-Fi for your house to be able to, even do things online, your website costs, right? You're going to pay to host your website. These costs, they cannot be directly attributed to a service, but they are costs that you certainly incur every month, every week, every year for your business. Now, when you take away those costs as well as the direct costs, that is when you have your net profit. That is when you have your net profit. And the net profit is usually also referred to as the bottom line. So you may find that you are making a profit on an individual item or on an individual service, but when you actually consider your overheads, your business could potentially be making a loss. Yes, the individual service has come in with a little bit of profit. Again, I'll use the pen example because it's very simple, very easy. You bought the pen for £1 and you're selling it for £2. So now you have £1 profit. But if the delivery cost or the direct labor cost potentially of having to stick something or whatever is £1.50, although your gross profit on that pen is £1 and is plus, which is a good thing, if you spent £1.50 on other things, when you think about your overheads, your rent, your this, your that, you spent £1.50, you find that actually your net profit is in minus. And this is why you may see that many businesses on an individual basis, it looks like they're profitable, but when you add everything together, actually they are not making profit. And so I want to encourage you as a business owner not to be so quick just to celebrate gross profit, but you need to think all the way about your overheads and the other costs, your accounting fees, your legal fees, your insurances, all of those kinds of things that you have to pay for regardless of whether you sell a product, those overheads, and use that to determine your profit, your net profit, and really see if you are making profit in business. I hope that's helping somebody. There's also another number that should be included when it comes to net profit, and that is the cost of tax. So you can have profit before interest income or interest payments and tax. And that has to do with the operational parts of your business. But when you take away your when you have your gross your gross profit, you also need to consider, after taking away your overhead, your operational costs, you also need to consider the tax liability that has to be paid on your profit, which is also a form of expense. And so this is where you have the very, very, very bottom line, and that's profit after interest, income, and tax. So these are some key terminology as an entrepreneur. No matter how small your business is, no matter how big it is, whether you just started or you've been in business for a long time, these are numbers that you should be able to be familiar with, terms that you should be familiar with, and numbers that you should be able to reel off, ideally, from the top of your head. Now, why do these terms matter? Remember the scripture that I gave at the beginning, that he who is faithful in little will be faithful in much. When you are able to identify that actually, yes, my revenue is growing, for example, or the expenses of my business are increasing, they should be decreasing. You're able to see how you are managing what you have at each stage of your business. You need to be able to understand where efficiencies can come in. As I said, if you're tracking, for example, your expenses, and you're seeing that last month we spent £1,000 to run the business, but this month is costing us £2,000. Why is it costing you £2,000? Is it because you're not managing things properly, or is it because your volume is increased? If there are increases in expenses, these increases in expenses should be able to match up with increase in income. You don't want to be seeing increased expenses and your turnover is the same. There should be a corresponding increase in the income. That's just one example. The other thing as well is about if you are someone that's doing production, if you're having to produce items, there's something called economies of scale and also efficiencies. It should be a case that the higher the volume you produce and the more often you produce, the quicker it should take you. So it should take you less time to deliver, but also it should cost you less per unit if you are into that kind of business. These are just some of the things you need to be thinking about. I've tried to keep it simple, but there are actually percentages, and there are actually terms, that are normally used to describe these kinds of efficiencies. And these are the kinds of things you want to be measuring in your business. Like I said, back at the scripture, if you are faithful in the little, then you will be faithful in the much. And being faithful in the little means counting the cost, understanding these terms, understanding these costs, so that you can make adjustments where necessary and move on to the next phase and the next level of your business financially. I hope this helps somebody. This has been Business, Faith, and Finance with Benedicta.